Do you find it puzzling when positive economic reports come out, but the stock market plummets? Or the opposite, you're baffled because you look at some economic reports that are not so good, but then the stock market surges? Well, you're not alone. And that pretty much describes the stock market that we've had for the last several months. And it can be confusing and, well, sometimes downright scary. So today I'm here to talk a little bit more about why that is. Markets are forward moving, and the moves that they make already incorporate all of investors' expectations. They're not looking at the past news, maybe even the news that was released that day. Instead, they're looking out weeks, months, even years forward, almost like instead of looking in the rear view mirror, they're not turning around. They're looking forward and keeping those eyes straight on the road ahead. So this means that investors are always looking forward to what might happen in the future. Do companies have better prospects tomorrow than they do today? Will the economy be stronger tomorrow than it will today? However, if investors believe that companies are going to do worse in the future, well, then likely they're going to go ahead and sell their shares. So you can see from the chart that I'm showing that the stock market and economy cycles of how the economy is doing and how the stock market are doing, they're related, but they're not exactly the same. And I liken this to taking my dog out for a walk. So I will be honest, Matilda, she has had not one, but two training sessions to learn how to walk by my side. And we have coached her, we've given her snacks. I always have a whole thing of snacks in my pocket. And normally she is lockstep with me. But I will tell you that if we see a squirrel or she sees a big dog, because big dogs scare her, not little ones, but big dogs, well, she's no longer walking with me. She's running forward, she's running back, but yet, funny enough, we're going at the same distance. That's the difference in the relation between the economy. So when you may hear positive economic news that the economy is stronger and the market doesn't really react and surge forward in a positive way that you might think, you might even hear that the economy is cooling down and the stock market, well, does better. Know that they are related, but they are not lockstep. So what do you do with this information? Well, it doesn't mean that you take it, throw it away and throw it in a basket. But what I do want to let you know is that looking at the market on a day-to-day basis and evaluating how it's responding to all of the outside information, well, it's a loser's game because you're never going to be able to predict with absolute certainty what the market does or should do or will do. Instead, doing what we do is the right move, and that is creating a robust portfolio that is not only right for today, but also right for the future, so that you're positioned in the right way to take advantage of the opportunities that the stock and the bond market give to us. If you have any questions about your portfolio or would like a second opinion, we do a fantastic X-ray screening to help you understand the risk, the overlap you might have, the tax inefficiencies that are in your portfolio to help you make good decisions with your portfolio going forward. Thank you so much. Nice to see you. Signing off.